life, your term show.
All right, so where do we want to start? I think it's we've already been in the new year, so I don't know if it's a 25 recap, what we're looking at 26, but to me, there's three things that kind of like three.
It's no 25. We're done with 25.
All right,
26.
That's
forecast.
out the window. That's out the window. But I'm just saying, I guess last year there was kind of three big things. One is real estate, because we focus on, we were right into that and we talked about that a lot. But then there's kind of two other big things that I think caught a lot of people off guard. Maybe not. I don't know. I don't know what everyone's thinking. But there's the gold silver moves, right, which were pretty aggressive. By gold and silver historic standards, their increases were pretty aggressive. And
we've been waiting for those since 2012.
Yeah.
So yes.
Yeah. And then there's the technology side of stuff with AI, and just kind of like, I mean, that's like just rip roaring and uprooting everything. And I'm not talking from an investment standpoint. I'm talking from like everyday usage.
So yeah, we'll get into it. Did you see the gold chart when they mapped gold against Berkshire Hathaway? And if you just held gold since 2000, it outperformed Berkshire.
Yeah.
Did you see that one?
Yeah, I did. That was a little while ago, right?
I'm sure I saw it like a couple of days ago. Yeah.
It's, but it's interesting because, and it sucks. Like if you needed the money short term, then maybe you felt like you lost. I don't even think you really lost some purchasing power. I think even before this run, it's kind of held up to, the M2 growth rate, because we were looking at those numbers before. But it's like when you store your savings in hard money, it kind of ends up working out, and we'll see. Maybe
we should actually check since like the year 2000 what gold is.
It used to be 10%. What back at one point last year.
Yeah, while you're speaking, I'm going to try and see if I can do it.
Yeah, at one point last year when I looked at it, that was in Canadian dollars. It was like right around the 10% mark yearly from back to the year 2000. And I don't know before this last run, like if you did it from 2000 to 2020, I don't know what that number is. That might be a little bit more insightful. But I mean, the number that you're trying to keep up with is about, I mean, you can, some people will say inflation at whatever, 2 or 3%. I think less and less people are believing that now. So the M2 growth is going to be roughly around 7%. So you're trying to keep that up. What does it say?
Oh, I just typed it in. Give it a second here.
What's the default? What are you using? Chat?
No,
Gemini?
I just went to Grok for it.
Grok.
It's going to take a second, yeah.
I noticed the last couple of days for me, Grok is a little bit slow. It times out sometimes. It just seems like it's overloaded right now.
It's saying 10.9.
10.9. That's to today.
Till Jan 1st. Yep.
Yeah. So do it to 2020, from year 2000 to 2020. I'd be curious to know what that is, because that removes, I mean, it's before any big run at all. And then silver, I mean, it's just catching up now. So that'll be interesting to see where that goes. What is it from 2020?
I just typed it in. When I press enter, it's not instant. 8.7. 8.7.
Yeah, so it did its job even there. I mean, you could probably, take smaller segments of time, but that's the biggest thing. That's what's really interesting. I just changed one of the plans on one of the company bank, the corporate bank accounts, and you had to call TD to change like whatever the monthly plan was, right? And what do you know how they have to read you that little statement? Before we do this, I'm going to read you the terms. You agree? And it said, like, I just want to, however they said it, I want you to acknowledge that the interest rate you earn on this is 0%, not 0.1, not zero, like it's 0.
I don't think I've ever heard that.
So no, me neither.
I deal so little with the banks, so I haven't had that happen to me in a long time.
But it was 0. It used to be something, right? So
why was it 0? What were you doing?
That's just what one of the checking accounts or whatever is. It's 0%. Okay. Yeah. Got it. So and I'm like, so when you have any savings, you either leave it there and you lose out every single year, or you try to park it here. And I know even things like gold can go up and down a little bit. I mean but that's the idea, is to protect the purchasing power, and that's why
8.7%, and now it's whatever. What did
10 point 10 something.
Yeah, 10.9%. I mean.
It's doing its job.
No management fees. No, I mean, listen, I know there's financial planners.
Well, unless you buy the ETF.
There's no, sure. Yeah. But I mean, you could have just bought physical gold.
Yeah.
Canadian coin and currency had physical gold, and there's no fees.
The crazy
10.9%. That's ridiculous. 10.9%.
Well, yeah, if you have a financial planner, like you were going to say, and they're getting you that, you're probably going to feel pretty good about yourself. But there's the fees on top of that, right? Yeah. That will remove that return.
Yeah.
And it makes a big difference.
Yeah, I can do it for silver too. I'd be curious what silver was. Silver, I feel like silver hit $40 in 2012 and then kind of dwindled away and did nothing. And now it's done that. So I guess the downside of this is you have to have patience, because with gold, like the key investing in something like gold is just, you have to do nothing. And there can be years, literally with gold, there can be years where it kind of feels like it sucks.
Well, I think that's the idea with savings. Like I think savings, in my mind, the way I look at them, they're not for next month. You know, these are savings that are like, okay, I'm going to store these away for the future. And by the future, I mean at least a couple of years, you know?
Yeah. Now I have a clearer exactly.
But I have different buckets. Like I'll have like the everyday accounts, then I have like kind of short-term saving stuff that I probably wouldn't put in something like that, that I have more access to, but it isn't in the everyday checking account or something like that.
Yeah, agreed. And the only reason you need that, because really you shouldn't need that with your savings, but the only reason you need that is because the world's unit of account currently is still a fiat dollar, so that, you know, the moment you need the gold, depending on what they've done with the manipulation of the fiat dollar interest rates, the dollar could be weaker or stronger at the moment that you need your longer term savings. So you need to have some liquid fiat dollar to your, you know, accessible, so that you don't have to dip into your long-term savings unexpectedly at a moment where maybe, you know, they've cranked up interest rates and the US dollar is stronger. And
totally. That's a good point, because it's more
which is a shame, because that's not really how, you know, savings should work. Like if we wanted humanity to really be the most fair and the most good and the most giving and the most expressive of everyone's unique talents, you want a savings that really just holds its purchasing power and is liquid at any moment in time.
Yeah. Yeah, and with gold specifically, I mean, it's pretty obvious that price has been manipulated over time too. With just the amount of paper contracts that are traded versus the amount of actual physical ounces of gold that they keep. It's the one thing that, you know, kind of I get frustrated about with the financial system overall, with a lot of different things, is, you know, all these futures that trade and all these paper contracts of a variety of different derivatives, variety of different things. I'm like, well, it just skews the true price. And I know things eventually break out or break down or whatever, but I just feel like it skews. And I'm not going to pretend to understand all those
some of it's
instruments.
Required. Like if you're a farmer in the agriculture world, you want futures in the markets. If you're a Bitcoin miner in the digital world, some of the derivative products offset your capital expenditure and guarantee you a certain price to, you know, be able to pay back some of the investment you made.
Because I don't understand how they're all linked and all of them is, I'm like, then it gives me this sense of uncertainty. But I can see where you're coming from for sure. But there's so many of them, you know, like, you know, I know you can just trade volatility. So you can just trade volatility. I'm like, how the hell do you just trade volatility? Like what, you know what I mean? I'm like, okay, like you can only look into so much. I saw
somewhere, I think it's Coinbase or something. Soon you're going to be able to, or you can already use hash rate as collateral at Coinbase.
Yeah, that was on a podcast recently.
Right? So it's all over the map. But I mean, with this gold silver move now, what do you think with the geopolitical situation going on now? Because I guess this gold move is a second order effect of the freezing of treasuries by the US on Russia, where central banks around the world said, holy shit, you know, US treasuries really aren't the safest asset. We better load back up on some gold again. I just had a flashback to how Canada owns no gold.
Well, but anyway, that's multiple central banks, but not the Canadian central bank.
Canada has not figured that out. Canada doesn't think it should have any gold. But
you know, especially right now, what's funny is because, you know, 50% of Canadians in Canada and the politicians hate America right now.
Yeah, shouldn't you own gold?
Yeah, so then
they can't make that connection. They can't make the connection. It's like 50% of the country doesn't want anything to do with America, but they can't make the association that maybe then don't load up on U.S. treasuries on our balance sheet as a country. How about we dig some gold out of our own ground and put it on our balance sheet? How about we dig up some of the oil in our own ground and sell it to the world?
Oh my gosh.
Maybe Canada is just a puppet state to the US. Like maybe we are really just a country that is a mineral natural resource reserve to the US, because why else do we not have a refinery? Why else do we not have gold on the balance sheet? Like it's starting to become obvious.
Do you mean by putting a central banker in power that has very strong ties to the New York financial institutions that used to work there? Do you mean that we're not just completely independent? We don't have a puppet in place there? It sounds like you might be.
I can't figure him out. Like he was
He's Mr. Burns. When you look at him, if you watch The Simpsons, he's definitely Mr. Burns.
And he was the Bank of England governor, and he seems to favor more Europe now than his New York ties.
Yeah, that's true.
So I just can't figure this guy out. Like, but it is weird that like Canadians, half of the sorry, you just brought up this point. Now it's like it's bamboozling me here. Half the country doesn't want any ties to America or thinks whatever Trump does is immediately bad.
Well, right now, but
they have not
pure
taken the next step on how to get independence from that would be to change what we have as wealth on the country's balance sheet. Why don't we start stocking up on gold, and why don't we start creating income from oil? No, that's bad. So they don't want that, and they also don't want any ties to America. So it's just like, we're just going to live in the forest. we're just gonna, hey, listen, we don't want to sell anything to the rest of the world. We don't want to trade with our closest neighbor. So we don't really want to do anything.
We
just want to play hockey.
Maybe what some Americans think of Canadians, that we live up here in igloos, maybe that's going to be the future. Maybe that's,
I don't understand.
It might come to fruition.
I just don't understand. Like, it just seems crazy. We have the world's biggest economy. Sorry, I didn't even mean to go off.
No, we don't have the world's biggest economy.
No, next
far
to us.
From it. Oh, yeah.
Next to
okay,
us. It's like you have this customer who you can disagree with their politics all day long, but just as a capitalist, I don't know, or as a business, however you want to say it, because capitalism is like a bad word suddenly. So, as maybe a business owner, someone brought this up. They said, well, Tom, Canada, I think someone in the government said, well, we're just going to trade with ourselves. We are going to be our own best customer. This person that told me happens to be a salesperson. I said, okay, if that strategy works so well, you're in sales. Why don't you just be your own best customer? How does that work? How do you grow the amount of savings in a country when you don't acquire any extra savings or extra cash, extra inputs, extra monetary value from outside of your borders?
We'll go back to the barter system.
It just doesn't, but people just lap that up. They're like, yeah, we're just going to be our own best customer. I don't know if it was Doug Ford. I can't remember which politician said it. So there's all these things. Just, oh my God. And then the poor young generation, sorry, Nick, you just cut me off whenever. The poor young generation, they hate capitalism, but we haven't had capitalism. We've had socialism.
We shouldn't say that, but it's not all of them.
But a chunk.
Yeah, it's a chunk. But it's a chunk of older generation. But just to be clear, it's not the entire
all of them,
chunk.
But a chunk, I think they blame capitalism for the state of the world the way they see it today. And my point would be, we have never had capitalism because anytime something happens in the capital markets that is quote unquote too big to fail, it's saved.
Yeah.
That's called socialism. So what they're really rallying against is socialism. But because they don't know how to define capitalism, they don't understand that we haven't had capitalism. They then blame this thing that they think is capitalism that's really more like socialism for their problems, and they vote socialism. Really what they should be doing is saying, hey, this socialization of the losses in the financial markets has been horrible. We want more capitalism. Where somebody fails, the bank or the insurance company or the business actually fails. That's called capitalism. Capitalism is you get capital, good capital, not debt, good capital. Then you form capital pools called savings. Then when you want to take a risk with your savings, you take that risk. And if the risk fails, you lose the capital. That's capitalism. It's very simple. But we haven't had that structure. We've really had socialism. We've had debt-based money, so not true capital. So you don't have to form pools of capital. You just go to the bank and borrow. Then you spend that money on whatever you want. And if you're a big enough corporation that does that, if you lose, you're like, oh, you know what? Don't worry about that. We'll just write those losses off. It's weird. We've been in a weird world. We've basically been living in some kind of dream world that we call names like capitalism, and it doesn't exist.
It really does. It hasn't for a long time. I guess probably 2008 was the big one. I guess maybe that I can remember. Maybe there's a bigger
I think
one.
Was the big.
But that was the big one when things really separated. That's when there was a major separation when they came in with quantitative easing and started trying to save all the financial institutions. And I guess a lot of things would have imploded because of the way they did it, but it was all those things were already in place. And that's when they just had to pull the trigger on them to save what they considered the financial system or whatever. And then it just kind of went off the rails from that point, like completely off the rails.
I wonder where we are then now. Like if you bring all that up to current day, like where are we now with interest rates and like the real estate? Because now we know, I think most people who pay attention to this stuff, like yourself and people we work with and different clients who are paying attention, are like, okay, the game is clearly controlled by the central banks. They tweak interest rates to kind of get what they want. So if you had to guess, like what happens to interest rates this year in 2026?
I think the Canadian economy is still shit and they're not going anywhere.
And I
know people are saying like, there's talk from different people, well, fixed rates are going to go up. And I just mean like meaningfully. I mean, I didn't think also they were going to go as high as they did. So I was very clearly wrong.
Same.
But at that time, the economy was also like on fire. Like
okay, but I don't know if you were really wrong. I think what you were saying is you didn't think interest rates could go up as high as they were without causing problems.
Oh yeah,
which those problems have happened. So technically, I'm not trying to get defensive like you were right, but really, you were thinking like, or at least that's where I was coming from, and I think you were similar. That if they raise interest rates that high, there's going to be second order effects that are pretty big problems, which have occurred.
Yes, I thought those problems would be even more acute though. So like I thought we would feel the impact more quickly, and I thought you could, whereas the government,
people have been more resilient than you thought.
And the government with their own financial picture has managed to kick the can down the road yet again. When that's something I think that we just can't underestimate.
Well, they haven't though. They just doubled their deficit. Like the deficit spending now is $80 billion.
Yeah, but no one.
That's not kicking the can.
That doesn't, to the average person, that's meaningless.
No, except when they go to the grocery store and everything's more expensive. But yeah, they can't connect those dots.
Yeah, they don't. Yeah, that's not. I don't feel. I feel the average person looks at that as like, oh well, that's why we had to raise the interest rates to that level. That's what we did.
Mm-hmm.
Yeah. And they don't connect the dots. But but. I still think like you ask the average person on the street, everyone's feeling squeezed and there's not extra money flowing around. Most businesses are like, I think there's more businesses now that see like a little sign of life. You know what I mean? It's not just like, maybe it's not the worst it's been, but it's definitely not good. So there's maybe a few more people I've spoken to that have kind of said that, maybe.
So what happens if the U.S. cuts rates, then Canada usually follows? And the U.S. between January and December of this year, they have, what is it? It's like $7 trillion. I might be at $7 or $8 trillion to refinance this calendar year.
Yeah, but we're so far ahead. We won't follow them immediately. They'll need some justification for the numbers to be able to cut. I don't think.
Well, they happen to have a new oil supply. Now they can control the price of oil much better than they could just a few days ago.
Well, that'll bring the inflation number, or make sure the inflation number doesn't go up because it'll bring it down.
They could actually make the inflation number come down now on the spot price of oil. So that's going to give cover to the central bank in the U.S., the Fed, to cut rates.
Yeah.
No?
Yeah. And the U.S. wants, I'm talking about us.
No, but we follow the U.S.
We did. This time we didn't. We led.
No, okay.
I understand what you're saying.
Agree.
The Canadian central bank trend, I know, we looked at it. It's like twice in history that it reverted. It went the opposite.
For a brief time.
Yeah, but because we led and we're further ahead, they can cut and we don't need to continue to cut. Is what I'm saying. So if you're talking they're going to cut by a point and a half, then yes. But if they're cutting by a quarter point or half point, then no.
I'm thinking 3/4 point to a point.
Yeah, so then maybe.
Well, just think of it. Why it would be very dangerous for the Canada, because the way we're structured, for us not to, because then the Canadian dollar would get stronger against the American dollar. Mm-hmm. So our already kind of horrible economic situation as is now with an $80 billion Canadian deficit, we're going to have higher rates, a stronger Canadian dollar, making our exports less attractive, shrinking our economy further.
Yeah, so you think the Canadian dollar with the state of the current economy, even if the U.S. cuts rates, with where our rates are compared to them, and with the state of our current economy, it's going to make our Canadian dollar stronger in a meaningful way?
Hey, a quick announcement in the middle of this podcast. Applications are open for the Platinum 2026 group. This is a mastermind group where entrepreneurs get together and share successes and challenges, and we all brainstorm together on how to grow our businesses and improve our lives. We go over things like this business building blueprint that we've shared over the years. We go through some mindset stuff, time management strategies. We cover it all. And a lot of the things Nick and I learned from growing Rockstar from 0 to an 8-figure business. We cover all of that in the Platinum group. It's for entrepreneurs and people who are running their own businesses and really want to take the next step with their business. Applications are open now. We do not accept everyone for that. It is a limited group and over half the group is already full. So for the next few weeks, we are taking applications. You can listen to some other Platinum members have said right now. We're going to share that, and you can go to rockstarinnercircle.com/platinum to learn all the details and grab your own application.
I'm 50 years old and I've probably done coaching for the last 20 years, various organizations. No organization's ever made me more money than the coaching here.
Places where I need direction or some refinement or feedback, it was the opportunity to get that from other entrepreneurs, other investors.
And the success from Platinum has really been the support. It's people to hold me accountable.
There's a lot of value in going at it with a group instead of feeling like you're going at it alone.
From a marketing perspective, master marketers.
We've been able to buy property internationally in a couple of different places. What seemed like an unattainable goal to travel or be away from my business for a month at a time has turned into something that we do every single year now.
For me, it was just such a great experience, and I'm just glad I did it. Really, today is the last day, and we're going, we're so sad it's over.
Being a member of the Platinum Group has certainly helped me live life on my terms.
And we know that for us, being a part of this group going forward means that we can expect continued success for our business. So it gives us that confidence moving forward to next year.
Anytime the US has really put liquidity into the system, our dollar gets stronger. So what percentage?
Yeah, I just don't think, because in the past, our economy has been kind of in a similar state as theirs. So like right now,
but our dollar is just, we're like a petrodollar. And now we just have really, I guess I see what you're saying. But
because no one's going to invest in Canada right now. That's the problem. So why would you invest in Canada or buy government debt when you can still get higher rate in the US and their economy's growing faster? And I know what you're saying. Well, because if they're going to inflate it away, you're going to want the Canadian dollar. But like if we had a little bit of an economic growth and it looked like there was potential there, maybe. But I don't think that's
because I can see what you're saying, because we're a petrodollar, and if the Venezuela oil supply just crushes the price of oil, there would be no reason for foreign money to come in here. I'm just going by history of, we're crap. The Canadian dollar doesn't have a lot of value. But if the American dollar starts cutting and getting weaker relative to the American dollar temporarily over 12, 18, 24 months, we can be weaker.
Yeah, but our dollar's so weak already.
No, I know this is my concern.
No, I know, but in the past when we've done this, it's like the dollar hasn't been nearly this weak. Right. Mm-hmm. So I don't think it's going to, and I think that's what changes. What you're talking about is not going to happen at the same way it happened in the past because of that.
The only reason I could come up with would be that we're a petrodollar, and we'll continue to be weak. Wow. That'll be crazy. That will be like nothing I've seen. So all the time,
I think we could cut rates. Don't get me wrong, but it's a couple of small cuts, and it's basically meaningless at this point until they give people confidence in something to start moving forward and be like, you know what? There's just economic activity, there's economic opportunity, there's jobs in this market.
So then play this forward for me, because now I'm interested in what you're thinking. We're not going to cut rates. We just ran an $80 billion deficit, indicating to me that the tax revenues into the government aren't close to what we need for our spending. So we just published this. We're not cutting rates, so we're not going to stimulate the economy in one of the most powerful ways to stimulate it. So then this year, when the next Canadian budget comes out, which now I don't even know when it is, if it's like at the end of the fiscal or in the fall again, but whatever.
I think it's the fall.
So now we're going to have a budget deficit next time of $100 billion, because we're not so the Canadian government's looking around, the Liberal government's looking around going, okay, we don't need to do anything here to stimulate the economy, because we're just going to run these deficits and print money out of thin air and throw it around in different places. And that's going to be the way we stimulate. So then the amount of debasement or purchasing power lost by Canadians over the next few years is just going to extrapolate stronger.
Yeah, I'm not saying it's good, but I'm just saying I don't see that.
But that's basically what we're saying. I'm not demanding that what I'm saying is right. I'm just questioning it. That's basically what we're saying.
I'm not saying that we can't cut rates, but what I'm saying is the rates. A couple is not going to make it, even if we do, we're not going to, they're not going down by 1.5 points. If they go down by a couple incremental thing, it doesn't even make a difference. And then where we have to start focusing now is what's happening on these bond yields now, because these bond yields, which are the kind of fixed rates, those aren't reacting the same way. And I guess maybe they do when some things get released saying, hey, look, we're just really, things are worse in Canada than you think.
Why, and what are you talking about? Because they're going higher or lower? What do you mean they're not reacting?
They're going higher. Or they're either the same or slightly higher.
Venezuela changed.
I haven't looked at them in the last couple of weeks, to be fair, but before that, they were kind of
with Venezuela,
upwards.
it kind of changes things because, like, what are you getting when you buy Canadian debt? Before it was like, okay, they have a lot of oil. You at least have that. What are you getting?
Who cares about the oil? We don't do anything with it.
No, but that's how Canada. No, but externally, if you're a big sovereign buying debt in a meaningful way, that's how Canada was looked. Like when you look at the energy exports we put out, that's our number one thing. Like that's what we have. I know we don't do anything. We could do more, but I mean, that is our thing, right? It's basically has been energy for a little while now. So what are you getting? So I guess just listening to you, I can't help but think
you're not getting anything.
No, I know. So like when you extrapolate, sorry, I just have to take this beyond what's happening now in 2026. Take this out 18 months, 24 months, 36 months. It's like, okay, so we're going to get a quarter or half point only cut in 2026. If that basically is what I'm hearing. If that quarter, maybe half point. And so that condos construction in the country is basically come to a complete standstill. Single family home construction in this country has come to basically a complete standstill. Mm-hmm. No rate cutting to really stimulate anything. Maybe minor.
Well, we've had how many points of rate cutting?
Yeah, okay. So, but I just mean in 2026, no further rate cutting. So like and real estate and construction is just a massive part of our economy after energy. So now you have Venezuela. I just don't like what I'm saying here. This is what's shocking me. So now you have Venezuela coming on where the U.S. is going to control the oil price, let's face it. And then you have Canada.
We got to look a little bit further into that because even Richard Diaz was posting some things about like how much oil they can really put to market from
Venezuela. But let's just let's just assume that that's why they went in there for the oil. I don't.
No, but I'm just saying that it's just the amount of oil that can come to market from Venezuela. They're like, it might not be able to move the market the same way, but they've been trying to get the oil price down for a long time. They want the oil price lower, just like they want the U.S. dollar lower.
So maybe they can't, but in my assumption in this scenario, I'm going with that assumption that Venezuela, the number one,
so what's the point?
Supply of oil in the world with refineries in Texas are probably going to, do stuff. I'm like, where does Canada's economy grow?
Well, what would you answer if I asked you that 3 years ago?
Well, I'd say, hey, there's some energy stuff we can do. We can sell, there's not this Venezuela supply that's come onto the market. And if we do some stuff, build a new pipeline, do some liquid natural gas to Europe, all that's gone. Or we can stimulate the housing construction market, do some housing, lower interest rates, get that kind of going again. But now we're saying no to both of those. And then the next thing that comes to mind for me is manufacturing. And with a trade situation that's not settled between Canada and the US, we don't have manufacturing growth really in any way either. So I guess, a few years ago, I would have said there's some energy hope.
Yeah. So isn't it the same thing? I mean, you could look at manufacturing and like the tariff thing gets resolved and all of a sudden there's some manufacturing, especially if you think the Canadian dollars are going to stay weak, there's manufacturing opportunity.
Yeah, absolutely.
There could be,
resolved.
I know this is all could and the pie in the sky stuff, but there could be stuff in the energy sector and they could stimulate the real estate stuff. I mean, we went through such a boom cycle that we pulled so much crap. We didn't do so many things in a lot of areas. From real estate, we pulled so much crap forward. We're in this lull. Does it even come back to this a somewhat of an equilibrium where then it's like that kind of spurs some of this activity?
Sure, I'm just
like we don't need to go back to these boom days. But if you get back to kind of a
But what brings it back? That's what I'm saying. Like, what are the big things that bring it back? I don't see any positives in any of the big sectors: energy, housing, construction, manufacturing. I don't see any future positives.
Yeah, well, I mean, that can change. You hope that's going to change.
No, but no. I'm just saying, as we sit here in January 2026, if we're making projections based on what the government...
but those future positives haven't been in place for the last decade.
No, I would say that you always kind of had this hope that there was going to be a pipeline approved.
So you don't have hope anymore?
Do you?
No, but that's what I'm saying. But so your hope might have changed because of the track record over the last 10 years.
Sure.
But what was needed to be done 10 years ago to spur things wasn't done, and you're losing hope. It can be done. And I know, look, I'm coming from the optimist perspective. You're taking like more a pessimistic perspective or realist, whatever.
No, I'm thinking they're going to have to cut interest rates a lot more this year to do something.
But for what? That's going to to just kind of get like some home sales going? Like the country itself needs more than that.
Yeah. You're optimistic. Yeah, I am more. So that's where we differ, because I agree that the country needs more.
So you're just thinking to get velocity of money up, get money.
Yeah.
Yeah. Okay.
They're politicians.
Sure.
They need to get elected again.
Yeah.
You got elections going to come back again in 3 years. You're going to change the whole country. And I agree with you. Do much better infrastructure projects, fix the country, fix healthcare. I'm on board. But I'm like, I see an elect. They're going to do nothing for a little bit. Then they're going to be like, oh shit, we got elections coming up.
But what I'm saying is the mentality, and I guess we're going really down a rabbit hole here, but the mentality of people now, because of the state of the economy, is not in a place that cutting interest rates is going to make a difference. That's what I think.
Not immediately. Agreed.
Yeah. So you're talking if there is trickle down second order effects, which typically there is over time, then eventually that gets things kind of moving again.
Yeah. It's their easiest lever.
But if they cut interest rates, so in the past, like if the more recent interest rate cuts they've done, bond yields have not followed. So they've either stayed about the same,
fixed mortgages.
They've fixed term borrowing, not just mortgages, right?
Sure.
Those things have not followed. So they've either remained the same or increased. Mm-hmm. That's not going to help them spur the economy. So they're going to have to get control of that, because they
yield curve control.
Yeah. Okay.
Sure.
Okay.
Yeah. Buy the bonds. Yeah. Get the rates down. I'm just saying the government doesn't seem to know what it's doing.
No, it doesn't.
The easiest
we can all agree
solution,
on that,
which is the wrong solution, is to manipulate the interest rates. That's all I'm saying.
Yeah, okay.
Because out of all the big sectors, I don't see where
it's the when you put it like that, like that's the easiest solution. So that's
all I mean.
Yeah, okay.
All the other stuff makes more sense.
Well, it's a mess. Well, that's why in the newsletter, I think I ended the January newsletter by saying, got assets with a question mark. That was the statement versus like got milk.
Yeah.
Because we looked at, you know what I looked at? I looked at real estate. There was a real estate chart that was put out, it was like Toronto area prices. And it was from 2015 to 2025. It was like November 2025 or something like that. So anyways, it just had the graph, right? And it kind of went sideways, went way up, came back down, a little bit sideways. And I'm looking at it, I'm like, well, this thing still trends upwards. I'm curious, what's the growth rate from 2015 to 2025 and this was Toronto area real estate prices. So I think I took some Treb numbers, and I think they were like detached homes with like Toronto, the GTA, detached homes or something. I forget the exact numbers.
Sure.
But anyway, so I went back, and from 2015, the beginning of 2015 to the end of 2025 or till November, or whatever the thing was, the compound annual growth rate was 6.4%. And you would never believe it. Like most people wouldn't believe it. With all the sentiment around it, all the headlines, everything. It went up. Prices are way down. Prices are down. Over the last 10-year period, that specific homes, I don't know condos, I don't know St. Catharines. I'm just saying, I was like, look, they're up 6.4%. And that's the Toronto area. Actually, what was interesting is CIBC put something out last month, and they were looking at different housing markets, and the lower priced housing markets outside of the big cities, they've actually continued to their long-term appreciation rate's actually higher. Yeah. Because they actually had the compound, like the CAGR rate of those areas, and this was across Canada. And from I'm gonna look it up. Anyways, I was curious.
Did you say CAGR?
Because I didn't want to say compound annual growth rate again, but yeah, that's why. But I was surprised when I saw CAGR there on the CIBC report. That's why.
You know what? There's are you going to look into something?
I just want to look this up.
While you're doing that, I just figured out a positive for Canada. If they really in the US try to do as much with AI and data centers, the amount of energy and build that they are going to push, like if Trump really goes and says, we are going to go all in on this stuff, which it seems like he's saying yes, then the amount of demand for some of our raw material, if we're just a raw material backyard for America, like maybe that's all we are. We're just raw material backyard because we can't refine our oil. We don't really do anything productive with our minerals. We just sell it, to whoever kind of comes knocking to our door and basically demands it from us. Maybe then
we sold a lot to China.
Yeah. They came to our door and just basically said, we're taking it. I think here's the price. I don't know. But if the U.S. does that, we are a small enough economy relative to that economy that might actually be a positive for this place. Because if there's that much build in what's going on and what Trump seems to want to do with America, that whether you like Trump or you don't like Trump, when they come banging on Canada's door for the raw materials needed to do that kind of infrastructure build over the next 2 years, 3 years, 4 years, 10 years, that could be a positive for Canada, because we are sitting on all the raw materials
100%,
that places like the US and China need. You know, I was looking at a map. If
let me just share this before the map. When I go back to this, the CIBC report, it was percent change in benchmark single family home price. So this is across Canada. Since 2019, low price cities, it was just under 10%, and high price cities was looks like about 6% here. You can't tell the exact number. So that was since 2019. Even
yeah,
up
you wouldn't
down,
believe it.
right? That's almost 10%.
Yeah. Low price cities, I guess that's the COVID effect.
Yeah, I'm guessing the same thing. And I don't know what qualifies as low price. Oh, low priced is below median, high price equals above median. So that's it. So then low price cities since year over year in October, from October 25. So that 1 year, 5%. Low price cities.
What about
the high price cities?
Yeah.
Down about 3%.
Feels like it's down about 20.
I know, but that's what it says here. But I mean, this is a blended across the country, right? So it changes it.
Yeah.
But that's why I was so surprised when I saw that Toronto number. What made me look into it? It was like over the last 10 years, it was 6.4%.
So then why did you say just now, you know, when we were talking about this, that like it's going to be more important for people to, you concluded the January newsletter for Rockstar members with assets.
Oh God, assets?
Yeah.
Yeah, because I just don't, because if you just look back as to what the impact of all this crap that we were just talking about, like whether they cut interest rates, increase interest rates, whether you have to spur the economy, whatever they're trying to do. If you look back, like we've just been doing this long enough, you're like, well, it all kind of leads to one thing. And if you have good quality assets, the dollar price of those good quality assets over the long term goes up. And that's why we're talking about gold and silver before, real estate. And the reason it does is, in my opinion, I know you agree, is like the value of our dollar goes down. We create more dollars, more of those units, and those things will hold their value better. So you know, we can split hairs and be like, well, are they going to increase or decrease rates this year or not, or whatever?
The theme is in place.
But over
debasement will continue.
Zoom,
M2 will grow.
Yeah. Zoom out a little bit, like, yeah, okay, so maybe they don't.
What we're talking about is where we're gonna see it in the economy. But the baseline of M2 growth just exists no matter what.
So and maybe prices don't go up. Like maybe real estate prices don't go up this year. So that 6.4% is no longer 6.4. That 6.4 at the end of this year, I don't know what that would make it. Call it 6.2%. But if the long-term average from 69 is roughly about 6.7, 6.8, something like that, we're still in line with the long-term average. Because then maybe eventually they cut rates and construction spurs and prices go up a few percent, then all of a sudden that starts creeping up again to this long-term average number. Like it doesn't change the principles that are in place for things. And I think that's where, you know, sometimes when I think both of us will have conversations with people and they're looking at the short-term impact of things, and it's like, well, okay, cool, that you're right. That all makes sense. Now let's go just one layer deeper, like how you were talking about capitalism before. Let's go one layer deeper, and like, what's causing that? You know, remember when we used to do like sell properties ourselves, and
we actually used to do things.
Yeah.
You're like, so you couldn't even say it. Remember when we used to sell?
I forgot what it was called, but it was. But remember when you used to negotiate these deals with the agents? They're like, you know, you would put the clause in there. We had like some clauses.
So when we were buying, it was actually buying properties.
Yeah. So it was like the closing cost clause. So residentially, we would have the seller pay for the closing costs of the buyer, right? And that was in the residential market at that time. No one had really seen that yet. So. And the agent,
because we were documenting it on paper, so it was clear as day.
Yeah, they're saying, hey,
on Schedule A.
Yeah, they're saying do a side agreement.
Do a side agreement. Like that is called fraud.
Yeah. So
Jesus.
But anyways, they're like, well, I don't like this. Don't use it. And then you kind of had to ask, well, why don't you like it? They're like, well, no, I just haven't seen it before. We're like, okay, well, why? Like, and you had to ask them why 5 times. And they're like, well, I don't understand it, or I don't think we can do it this way. And then we're like, well, what if we gave you a letter from our lawyer explaining this is legal?
That's right. We had that letter. Yeah. I forgot about that.
But we had to go like, sometimes you just had to get to the real, and that wasn't just for that clause. That
One brokerage banned all their agents from dealing with us for a while. Remember? It was a Hamilton brokerage.
They did, yeah. And then they started using
it
Yeah, I
like
know.
years later.
I know. Can you believe that? I know. I remember the broker's name, but I won't
Don't
say it.
say it. Yeah.
But when we got an offer with our exact clause copied from that
And
brokerage.
the agent from that brokerage was explaining it to our team member,
they're
saying,
like,
I don't know if you've seen this before. This is how it works. I'm like, holy shit.
Yeah. But it wasn't just that clause. It was all sorts of things. When there's this objection or questions around something or lack of understanding, you just kind of ask why. When you go those 2 or 3 levels deeper, that's where you kind of get the real understanding of what's going on. Like that's the principled approach of things. And that's why I look at this type of stuff with what we're talking about, interest rates spreading the economy. It's like, okay, well, what does that do? And what's that mean? And what's that mean? And you go 2 or 3 levels deeper and you're like, oh, I guess it's this.
Own assets.
Well, I don't know. I can't find the argument against it. And if anyone listening has the argument, reach out to us, email us.
There's not much of an argument
against
it. Good
I can't find it. And it's not just Canada. This is
your asset.
This is
could be
globally.
So when you say asset, what are you talking about to give ideas? Like,
well, anything that can't be recreated and for dirt cheap.
Okay.
Like
a business, an income property, gold, silver.
Yeah. And it might.
Are we allowed to say Bitcoin?
It might change.
I like to say it.
Sure. Yeah. Bitcoin. I mean, Bitcoin's served that purpose to look at the Bitcoin growth over however many period of time. Yeah. Some people might look at the 1 year. Okay, yeah, 1 year it's not good, but there was periods of time when the gold 1 year wasn't good. I mean, same type of thing. But assets can change, right? Like what makes a good asset can change. So, land is different. You kind of really can't create the land, but the property on the land, maybe technology comes along and makes the ability to build that property substantially cheaper.
Sure.
And that can change. Just like maybe a business with a good piece of software was an asset. But now with AI coming along and what you can do with AI,
pretty much free.
So that's what I mean. So that asset's now, okay, well, so now then you have to adjust with the times because there's been this technological innovation that has now changed what that asset was. So you can't just be blind to things.
And then the new variable in assets that I think people need to be aware of, and this comes to mind just because of that new mayor in New York got elected. One of the actors that was really supportive of him just had a headline, I think it was De Niro, I can't remember exactly, basically said, maybe it was not even a real headline, so don't hold me to that, but I thought the premise of it seems accurate, was that they have to get out of New York now because they're worried, I guess, that this mayor said there's going to be some tax placed on certain people with houses so that their house that they have in New York, they're worried that they're going to lose value of it. So they voted for this guy now. So I guess now the thing with assets is, which we've never had to think about in our lives. This is like a new thing. There is a jurisdictional component
100%.
that you need to be aware of that is more of a concern than has been before. Well, and that popped up in just maybe the last 2 or 3 years.
Yes. Well, look at California, right? I don't think it passed, but they're looking at creating like that, what is it, a billionaire's tax? That's what they're calling it.
Yeah.
But
I heard a few billionaires, the names didn't come out, but on New Year's Eve, did you see those posts where that one of the guys from the All In podcast was saying a couple of buddies who are billionaires,
they're out,
exited California on New Year's Eve, just to make sure they were out for January 2026.
Yeah, I believe it because they might go retroactive. They were saying, and then,
that's right.
And then what they're going to do is that it looks like is they're going to need like a list of all your assets so they can sum up and assign a value to it and then tax you accordingly. And I'm like, so like, if you have assets in California,
you have a silver tray given to you from your great great grandmother, and that silver's gone up in price.
Yeah.
Now the silver tray is part of your net worth.
Yeah. But if you have assets in California, I mean, all of a sudden you're like, well, I'm a little bit, how much do I really like San Diego? San Diego's beautiful, but how much do I like it?
And then over the years, I know friends, I think we both know friends who've left California because of all this. So the jurisdictional thing is a new element to all of this kind of stuff. And then
look in Canada, what's happening. I mean, there's a number of people that look at Ontario and they look over at Alberta and they're like, you know what? Some of the things going on in Alberta, I like. And I'm not saying it's everyone.
We both know people who have exited Canada. Recently.
Yeah. Well, I'm just talking within Canada.
Yeah.
Or
entirely.
Not even
so there's just
countries.
choices. The jurisdiction. It could be city, could be province or state, could be 100%. National. Like it's just a new thing.
Well, when Toronto implemented the extra property tax. Right.
Yeah.
So land transfer tax.
Land transfer tax. And then what you said about software is really interesting because before we were recording, Nick and I were chatting about a little piece of software that I'm playing with, a little app that I wanted to create that I was really not able to get for like 15 years. Simple little app. And then I used, is it Claude or Cloud? What a rough name. Claude Opus 4.5. And I used this app to create it. And it cost me, what did I just say? $3.45 in tokens?
Something like that.
And I think it cost me $1 to make it. It's the extra money was just me monkeying around making changes. So for like $1, I made an app that would have cost us, Nick, I would say $1,000 at least on getting a freelancer and probably 3 weeks of email back and forth and sketching and
$1,000? That I don't.
$2,500.
I mean, if you're like hiring some random dude off with like no reviews,
Yeah.
some freelance.
Yeah,
But if you, I mean, I would think it's 10 to 20. At least.
Yeah. Oh, yeah. Well, we've paid 10. We've done.
That's what I
more.
mean. Like for just
I'm going-
$1,000.
Okay,
is
so like we've taken something that let's say was $5,000 to $10,000, and now I did it for $1.
Yeah. Well, $3 because you made up.
$3 because Keith, Keith, I hope you're listening to this. Keith made me ruin it, and I had to make all the changes to take it back. But I'm joking, Keith. But yeah, so like software development has gone from $5,000 to $10,000 task and weeks to Nick. Just so everyone's listening, if you haven't played around with this, I used Claude Opus 4.5. I think I started at 8:01. By 8:11 or 8:16, it was like in between 10 and 15 minutes. I had an app on my phone. And it's in the sandbox of the development app. It's not like on the App Store. So like you can't get it yet and that kind of stuff. But it is functional on my phone within 15 minutes of 3 prompts. The first prompt was the app, and 2 prompts were like, can you change the label at the top? And I think the other one was like, can you change the color or something? And that was it. In 15 minutes. Think of the amount of people going to university right now for computer science and software development. What the...
Are we 3 years into these things?
Yeah, I think it's about 3.
It's 3, right?
Yeah.
It was like December, November of 22.
I think it was 22 when ChatGPT first came out. That sounds about.
We're 3 years in.
I know, and it's getting crazy. It literally, Nick. When I was back. Okay, now this is a long time ago when I was at Oracle. You would have a meeting with like 3 or 4 developers on like, okay, we're going to this client. We want to make a demo. Here's what they told us. Then I would relay it to the people that are actually doing this stuff. Here's some sketches. Do these colors. They would come back to me. I'd go back to the client. They would say, oh no, that demo's not quite right. We'd make change. It might take us the sales cycle on doing a prototype. So the sales that required a prototype might take us 3 to 6 months to get the prototype kind of built to be able to close the sale. Now with this kind of stuff, you could talk to somebody at 9 a.m. By 1 p.m., you could rebook the meeting and say, hey, we have the prototype done. The value of coding and software development, and this is the weirdest part, like
plummeting.
Yeah, back in the day, the value accrued to whoever had the software and whoever had the database of users kind of with the software. The value doesn't seem to be accrued. The only thing left now, because the value in a company now is not accruing to the software because the software can be duplicated. So your clients or the audience still has value, but like where the value accrues to now, and I guess for when I say this, maybe just to illustrate it a little bit more clearly, when the company I worked for a while, NetSuite, went public, they went public for $1 billion on the New York Stock Exchange. Back then, I don't remember what it was, but they weren't doing $1 billion in revenue back then. But the stock market valued them because, in large part, because of their growth rate and the software they had was so unique relative to other people that they thought, oh, this company's worth $1 billion. And a lot of that value...
If that software can be recreated.
If that software can be recreated, because NetSuite at the time didn't have all the users. The market was saying, okay, your software is so good, we can see on your growth rate, you're going to get a lot more users. But now if you're valuing a company that comes to market with a pretty cool piece of software, who's to say the guy next door by lunch tomorrow can't create the same software and steal your growth rate? So where in a company now does the value accrue to? And this is where going forward, when you want to invest in what we're saying assets, okay, shelter is still like a need. You need a roof over your head, right? So like that one seems to work, but a lot of businesses and a lot of people with all their money in the stock market right now, and especially a lot of people, let's face it, financial planners have put a lot of people into tech, especially if you're fairly young and you want growth. These tech companies, how do they maintain their value over the next 10 years?
There's a lot of them that don't.
They think they know they don't. That's why they're spending so much on the race on who's going to get the best AI, because they know it's like whoever gets the best AI.
Yeah, you're talking about the huge ones. I'm talking about even the smaller ones.
Okay, those ones? Agreed.
Yeah, like there's a lot of tools that we use that we've needed to add-ons for this or for that. But I mean, soon enough, it's like, well, we'll just create one and that's it.
Well, we're thinking about launching this app that I just created to members or putting it on the App Store for free or for like $1. But that's somebody in the past we would have paid $5,000 or $10,000 to. That's gone from the economy. Like that job is gone from the economy because we just did it ourselves.
Yeah, that's
for $1.
and that's the part that freaks people out because and look, I'll explain it like this. Your savings, so if we go back to savings and hard money or the savings you use to acquire assets, those are typically acquired if you're starting from scratch with a zero balance by producing more value than you kind of use, right? So if you produce $100,000 into the economy, and people give you $100,000 for your work, that's the value you've created, and you only spend $50,000, you have $50,000 in savings, and you now need to figure out what to invest in, what to put in, how to protect it, whatever. So it's finding those.
Where do you put it?
Well, it's not where to put it. It's finding the places because the number of places to then create that value into the economy to get the 100,000 initially, it's
tougher.
That's what freaks people out. You know what I mean? That was I had a podcast with the guy yesterday. I was talking to him and he said, mortgage guy. So he was talking about a bunch of different clients he's seen. And he's like, yeah, something that I've just really noticed is these guys with their skills. So he was talking about like electricians, HVAC guys. He goes, I've just seen those guys. They just pick up and move. When Vancouver got so expensive, they didn't like it. They were having a family. He goes, they're gone. They had their own business. They just set up there, get some clients there. They're up and running again. Like those skills that we've diminished their value for so long. Because before it was like, oh, you have your MBA. Like, wow, you have your MBA. Oh, you're a plumber. Like there was such a difference. Where now it's like, oh, you're a plumber. Like it's so like you're different. Lucky. Yeah. So it's just changing. I think that's where things head. There's a shift back to that.
Briefly for under 10 years. Because some of the humanoid robots that are going to come on and in a controlled setting, not walking into your house to fix a plumbing issue, but in a factory that might have to do some heavy duty welding or something. If you can have
in like a warehouse, new construction, like
it's a repetitive welding task or hammering task or electrical task. Have you seen some of the new Boston Robotics robots?
Yeah, well, you're saying 10 years. That's almost today.
I just mean the supply chain to create a lot of those robots needs a little bit of time to. Well, Tesla apparently this year at their Gigafactory is going to have the humanoid, what do you call it?
The assembly line.
The assembly line of humanoids. And then Elon
Did I hear right? Was it 8 million square feet?
I don't know, three pentagons was the size of it. Or something,
I just heard the number. I was like, I didn't rewind.
And a chunk of it's going to be for humanoids. And then Elon made that, I don't know if it was on the Moonshots podcast or not. He made this comment somewhere that I thought he said, and it'll be awesome when humanoids come off the assembly line and then those humanoids immediately start helping to build the new ones. And I was like, holy shit.
Yeah, it's creating an army.
It's creating an army. But that's an exponential growth because as every new one comes up, there's a new one to build. And those existing ones are already up for building. So you just compound the growth of the humanoids.
Well, have you seen the Teslas? How they come off? I know you've seen this. They come off the assembly line and the Tesla will drive itself. The car will drive itself to the customer.
Yeah.
It'll deliver itself.
Yeah. That's crazy.
But just think about this. Think about when the humanoids come off the line.
And there's a humanoid inside the Tesla.
Oh, well, that's what I was going to say. Well, but then they get onto one of these.
You got the car and the humanoid.
The bus that he put out? The humanoids get onto the bus, and the bus drives around to the customers' homes and drops off the humanoids and all the
humanoid walks off the bus into your house.
That's what I'm saying. Yeah.
But what would you like for dinner?
But the craziest thing about this is like it's not, maybe it's not going to be able to cook you dinner, but the actual ability for that to happen was only 5 years ago.
Oh,
that seemed like a pure pipe dream.
We're hitting the exponential part of the curve.
But to say right now that 5 years from now, there's like no way that's going to happen.
No, you can see it now.
I think there's greater than a 50% chance that it does happen.
I think because, in my full self-driving, if people haven't been, if you have a friend that has full self-driving in a Tesla, go in that Tesla today.
Oh yeah, you have
to do the full self-driving today. And people used to, I think people still think it's like just for highways. Like my full self-driving drives me door to door.
No, because other cars, because my car has it, and I don't trust it because it's a pickup truck, but it's a Ford, and I just don't trust the Ford technology based on some other stuff that randomly happens. I'm like, I don't trust it to drive on the.
Because will it do door to door now?
No, it doesn't do door to door. But so most other cars have this, and it stays in the lane, and it'll follow appropriately, like the distance that you want
got it.
So it'll stop and go, like whatever, right? But it doesn't do what that does. And then yours has modes. It's like, take your time and just stay in the right lane.
Hurry mode will just go and change lanes and get around slow moving cars. It's just absolutely, you get used to it so quickly that when I was driving my wife's car the other day, the light turned green and I didn't press the gas, and I'm like, why isn't the car going? I was so used to full self-driving. I forgot to drive the car I was in. You know what I mean? Like, I have to press the gas. Oh shit! This is an old-fashioned car. I got to press the gas here. You get used to it really quick.
That's why everyone thinks it's the same thing. And it's not. It's not.
So when you mix in AI, it was that video I saw where a guy was doing an oil change on an old Nissan or something, and the AI Gemini was so good at telling him, go under the hood, open this gasket, or go raise the car and then look for this flap, and then make sure the torque on the wrench is this setting so that you don't over tighten when you close whatever it was for the oil change. And it was walking him through the oil change. I'm like, oh my God, once you put that intelligence inside a humanoid, and with the new hand dexterity that I just saw that's coming out, I'm like, okay, well, it obviously knows what to do on this old Nissan to change the oil. It's just the human still had to turn the cap. But now when you marry that intelligence that's already here today, that's not future intelligence, that's here, and just put it in a humanoid, could you not have one of these Tesla humanoids doing the oil change just by itself? Mm-hmm. And I'm like, I think the answer is, yeah, you could.
Yeah. The one thing that I've been playing with recently, and I don't know if I still want it in the house, and I know you don't want it, but I got one of the, I upgraded one of the Alexa devices, and I got a new Alexa device because they released, I think they're calling it Alexa Plus. So that's their LLM. Mm-hmm. And instead of before, like if I wanted to look for something or ask whatever, chat or grok something, I'd have to pick up my phone, open the phone, like you type into it or whatever.
In your house?
Yeah. Or even speak to, or you need your computer. But now, like if something comes to mind and let's say I'm making something in the kitchen, I'll just say, hey, Alexa, this, and it talks back to me the same way that all these other
that come with a US NSA sticker on it?
Oh yeah, no, 100%. All the phones.
I'm joking.
No, all the phones should as well. But no, I agree with that. Yeah. I mean, there even the
Hi, we are listening to you actively now in your home. Well, you paid for the device. Thank you.
Yeah. Well, the old ones had a camera, like a camera cover that you would flip a switch and you could actually see something come over and block the camera. Okay. Now it's just like an electronic.
Oh, so you don't even know.
So like I put a piece of tape over that at least. I'm like, but even still, like, I don't know if I want it in the home, but I've wanted to play with it. And I'm like, when it's that accessible, when it's just everywhere, then it's like Iron Man. Like then you're having that, and when they get more powerful, which this one now is, it can do multiple different things for you depending on smart devices, open the garage. So I could literally like stand there and say, hey, unlock the door, open the garage, call this person. Like it's just like, and you're just standing there. You don't even need the phone or anything. Like it just changes things dramatically.
Mm-hmm. Sorry, how's it opening the garage?
Well, if you have one of those linked...
so you link it to the Alexa. Yeah.
Yeah, you have one of those...
Yeah.
The remote
absolutely, things. Yeah. Okay, so then just for some predictions...
So anyways, we talked about gold, real estate a bit, and there's AI. Not AI, technology, which is basically all AI right now. So for
predictions on interest rates, gold, I don't know, real estate market, and I'll come up with one other one maybe here. Oh, Bitcoin this year. Let's start with interest rates. 2026... 0 cuts, 1 cut, and then a raise. What would be your prediction?
No raises. No raises. I think we're 1 to 2 cuts.
1 to 2
quarter points only. Like I think we're 1 cut for sure. Second one's like it's a coin toss. That's
Yeah, I'm lost too. I'll go 2 to 3 cuts. Yeah, I'll go 2 to 3.
We're talking Canadian. We're talking Canadian, right?
Yeah. Canadian, I know that seems aggressive, but I'm lost. Maybe it'll be none. Maybe they'll just raise rates. I don't know.
The thing
for the first time, I feel lost because it feels like there's, at least before from 2008 to like 2022, it was like obvious that they were crazy. We are just going to keep rates low for a very long time, and we're quite open about it. Now it seems like they have all this debt, and they're like, we're going to play with fire. We have all this debt, and we're just going to not raise lower rates because we're just going to blow out our annual deficits. And I'm like, okay. So they feel like they're playing with fire now.
Yeah, they're
okay to play with fire.
The only thing that might change that was the U.S. ones go down, right? And like because of that new spending bill that the U.S. has, that's going to really come into effect like right around now or in the spring, like over the next few
big
months.
Beautiful bill.
Yeah. like maybe that really just sets the U.S. economy on fire. And that drags, and we get dragged up with it, which would be nice. The one thing is that
basically, our whole strategy for Canada's economy is how the U.S. does. Just so you know.
So for everyone that hating Trump right now, just that
hopefully the economy does okay.
We probably have more hope with what he does in the U.S. by helping us than what we're doing here. But then because they made such a big stink last year about these tariffs, inflation, the prices are going to skyrocket everywhere. U.S., Canada, that never came to fruition, right? So there's a lot of fear mongering about everything going on.
And now with this new oil supply, which I know is debatable or whatever, they have another lever they can pull to perhaps control inflation.
And they have more negotiating room against Canada. So like if we can't get our heads of our butts and start figuring
that was the other thing I wanted to bring up before we go to the next prediction. I saw a map of like Greenland with a U.S. flag on it, and then Alaska with a U.S. flag on it, and then America obviously with a U.S. flag on it, and then you see Canada in the middle of that, and you're like, wait a second.
Writing's on the wall.
There's one thing that doesn't match the rest of these things. What is it?
Oh man.
But okay, gold. Gold now, because it's had a beautiful run. Are we going to, this 2026 stay flat, ramp further because the debasement just goes on and nobody has trust in geopolitics? That's a tough one.
Because of the run it's had, it's so hard to see that. Only because of like your view skewed by history. But if you look at how long it's been held down, it actually could go high. I'll say higher.
So slightly higher or a lot higher?
Where is it now? Like 45 or so? US?
I've lost track.
I think it's lower mid four.
Yeah.
I'll say it's
slightly higher.
Well, I'll give it even. I'll say over 5.
Over 5K
US and
okay.
Yeah. I think it goes.
Yeah, over 5. Okay. Yeah, I don't know.
And that brings silver with it too. I don't know.
Yeah, I'll go over 5 too. Yeah, it's come up so far. You know why gold just has, because it ramped in 2008, I was convinced it was going to run forever. And then 2012, I believe it did have a nice run. And then it just kind of settled down for like a decade. Now that I've seen this run, I'm like, is it doing?
Okay. So then let's do this. Do you think it ends up between 4 and 45, between 45 and 5 or like over below 5? 4 or over 5? Like, I don't think it goes below 4.
I'm going to go over 5 as well. Over 5 in 2026 gold.
I could see it ending between 45 and 5 too, but do you think it goes back below 4?
The amount of debasement and spending that's about to happen.
That's what I mean. Does it go below 4?
Okay, over 5. Canadian real estate. I don't know if you want to. You can choose any stat. If you want to just choose activity. The way I'll say it is I'll say more activity slightly than 2025, like more transactions, but it doesn't mean higher prices. Because I think a lot of people have held on thinking prices are going to rebound and I'll sell when they rebound. And I think a lot of people might be forced into finally selling some stuff. So I'm going to say more activity than 2025. So like quote unquote healthier market, but prices don't reflect that kind of transaction.
I'll go the opposite and I'll say higher prices. And
higher transactions?
Yes.
Okay.
And here's why. I'm not saying it's higher by 10% or so. I'm talking, low single digits.
Sure.
And the reason why I'm going to say this is because what we saw at the end of last year is we saw some investors scooping up really good good properties for really good deals.
Good price. So you think year over year.
And so, what I'm thinking is I'm like, because I think activity picks up. Okay. And then
So next September, if they bought it in 2025, September 2026, the price.
Well, it's not even that. It's just that those deals, because activity starts to pick up. So those ones where people are like, I can't believe you just bought that house.
Yeah.
Like, I forget, there was one at like 600,000 that were like, oh my God, that should have been over 7.
Yeah.
You know what I mean? Like how the heck did you get it? And they're like, well, they needed to sell. They were moving. We're like, holy crap. Like it was just a great deal. And I think because transactions pick up, those types of opportunities slowly start to disappear. Okay. And so the thing that we thought was going to be 7 is still 7.
Yeah, got it. Okay. So I'm saying activity up, prices flat or slightly down. You're saying activity up and prices perhaps slightly up.
Yeah.
Okay. Bitcoin. Oof. Here's a big one because 2025 didn't go the way we expected. 2025, I was flat out wrong on what I thought Bitcoin was going to do. I'll go first on Bitcoin. Bitcoin in 2026 absolutely creates a new all-time high. I don't know where that is. I don't know if it's the old one was 126. So it could be it's somewhere between 127 and 1 million. I don't know where the all-time high, highly dependent on how much money is printed in the economy. Because the thing with Bitcoin is it's so tiny. It's turned into a global asset that is still relatively so tiny, it's so reflexive to any liquidity changes that when liquidity gets tighter, it gets hammered really hard. When liquidity opens up, it responds really well. So I don't know, but I am going to say new all-time high.
Which is weird though, because the liquidity has opened up and it didn't respond the same way as other things that
it's opened up in we're talking 25 days.
No, I'm talking over the course of last year, and it's lower than the end of the previous year. So the
liquidity is tightened.
Higher.
No, liquidity is tightened over this last year. It's just starting in December to open up again.
Yeah.
Yes.
Global liquidity.
Yeah. Well, we'll check it. Maybe I'm thinking U.S. I might be thinking just U.S.
I don't know, because of China and stuff like that too.
Yeah. Okay, so maybe global liquidity. I could be wrong.
And the reason why,
I'm thinking maybe just
and I could
US.
be wrong too. I could be wrong, but because then I was looking at if you look at this tech stocks and all those different things, and gold made its run as well, and I'm like, it's kind of surprising that Bitcoin kind of had the ending to the year that it had, but I think that I agree with you. I think it's up. I'll say. Yeah.
New all-time high or not new all-time high?
Yeah, I think between 125 and 150.
125 and 150. Okay.
Yeah, I really think 150 is like a very real number for it in the not too distant future. I don't know why I think that, but it's just because of what I've seen happen with tech stocks and gold and stuff. I'm like, huh. And then now, because even a guy today was telling me,
we saw the liquidity that is planned for the U.S. between the big, beautiful bill, the changes to the ESLR, the Treasury General account is at an all-time high. It's going to be spent in the economy with the midterms coming up.
But you see what's happening with copper, right? And I know they're trying to bring gold down, but then this guy was telling me, because he's in this market, lithium was roughly $1,800 off of a roughly $600 low 18 months ago. So lithium's gone up, and I know lithium's batteries, and he was saying, it used to be, used to kind of talk about it like as an EV thing, but he goes, now that's all political. So now they talk about AI data, like power storage,
changing,
and it goes, all of a sudden it's going. But you're seeing all these different things spike because of those circumstances, like we're talking about. And I'm like, that one's the laggard right now, and I think it has its run too, like these other ones have had. Basing that off flipping nothing really.
And then no, I think we both are. We both are. And then what's your prediction for AI? And maybe on that front, just one. I guess we can already make apps for $1.
I have no prediction. My prediction is that
do we see a humanoid surprise us, or is there a shit? I never thought about this. Is there a fucking negative event where did you see an Anthropic? I think it was in the fall, had that one AI that was they had to pull the plug on it somehow, it went wild.
Yeah, I kind of heard about that. Yeah.
Do we have a weird AI event?
I just think
sort?
My only thing is that in 1 year, whatever anyone's best
we can't
guess
even
is,
imagine.
I think it's going to exceed.
We're on the exponential part of the S curve, the exponential part of the curve. So anyone listening, technology increases linearly, and then it hits this inflection point where it just starts growing exponentially, to Jeff Booth's thesis on exponential technology growth. It feels like we're in the exponential curve.
Whatever I think is in a reasonable progression over the course of a year, I think it's going to exceed that. And I think we were talking about it yesterday. I was on a mastermind call and I was talking about it with a few people, and I was just saying we're actively asking everyone in our office to use it. Use it. Here's how we're using it. We're doing those calls for the VIP group. We're doing monthly AI calls for those guys this year as well. Just the importance of understanding this world is it's like understanding the internet when it was launched and kind of the things. I just think it's important.
Some of the smartest tech guys that we both kind of listen to will say that the singularity is here. We're in the moment where artificial intelligence surpasses human intelligence. This is something that the tech crowd has been planning for decades, and we're now here where it's we are living in the moment where we transition from the human species being the most intelligent thing on earth to the birth of a new species, artificial intelligence, where its intelligence surpasses human intelligence. It's called the singularity, and that's what they believe we're in now. We're in that moment, and no one knows the definition on how to say it's official.
Yeah, what is the Turing? There was the Turing test. What's the tough? Humans last test. What's that thing?
I don't know.
There's the hardest test ever created for humans.
Yeah.
And it's getting scores of it's approaching the highest 47 out of 100. But it keeps incrementally getting up.
Well, in Utah, I think you sent it to me, is the first U.S. state where medical prescriptions without a doctor being involved are allowed to. So if you have a prescription and you want a renewal on it, AI is allowed to okay the renewal. And they tested this AI in Utah, I guess, against what doctors were doing. It's like 99.2% accurate as to the same decisions doctors would make. So now this one insurance company, I guess, in Utah is having AI okay prescription refill requests. So now we're already to that point. Nick, I don't know if I told you this when I was in New York a few weeks ago. I called this one restaurant, some breakfast brunch place that was popular. You actually needed a reservation for like breakfast. And I called the number and I knew I was speaking to an AI, but it was much better than like the basic chat.
Yeah, like the automated attendant.
Yeah, like it sounded like some lady, like it's like I was having a normal conversation. And at one point the AI starts saying, we don't take reservations over the phone, but I can see that there are reservations available for the time that you're asking for. Check your phone. I just sent you a link to make the reservation. And I looked at my phone. My jaw was on the ground. I was in the lobby of this hotel. My jaw dropped. I looked at my phone. The text was already there with the open table link to that restaurant for me to make the reservation. Yeah. I was like, okay, that's useful.
But how soon if Apple ever can catch up and get their heads out of their butts
to do the reservation
until you just tell your phone, hey, open table reservation here for whatever time. And
well, Ruben did that on a downtown Toronto one. You were actually at the dinner with us, then you had to take off, and then we went to another place. He called and hit one of these AIs, and it just made the reservation form right on the phone, beautifully.
Yeah.
Wow. Okay, so in AI, what's our prediction? That our prediction is we can make no prediction because it's too crazy.
Yeah, whatever. Like if I could go completely outlandish, but if I whatever I think is a reasonable progression for it in 1 year, it's going to exceed that. Because there's no way that I thought we would be where we are now 3 years after that initial thing was released. Like 3 years isn't a long time.
Yeah.
And if you actually use all these tools and you look at them, they're powerful.
Next time we chat, we got to ask you about what you're thinking for your daughter's first university and school. And all that
that's a daily
stuff.
discussion. So yeah.
All right, cool. Thanks everyone.